This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the TF Metals Report podcast highlights for the week of July 26th. 2021 proved to be an eventful week, with Chief Goon Powell mumbling and stumbling his way through his Fed lines and press conference, putting a lot of spark in the precious metals, deflating the dollar, and we even saw bonds rally a little bit. So it was a very good week in the precious metals, and we'll see if we can extend those gains in the month of August. Well, back on Monday the 26th, we were picking up on what looked to be a positive sign coming out of copper. We don't just talk gold and silver at TF Metals Report. We try to keep track of the entire macro situation, the pending stagflation, the economic situation in the U.S. and globally. And one of the ways we can keep track of inflation is through base commodities like copper. And copper has been rallying hard, looking to move back toward its old all-time highs from earlier this year. So again, on Monday, we started the week by discussing copper. We'll close with copper today, just as we did back on Friday. Again, rising off of the low. It washed out. Again, on that Fed day 6 weeks ago, it was trading actually below where it is now. It was trading in there at about 455. Dumped through its 50-day, went all the way down to 410. Made a new low, a week ago today? At 420. And then it's been green candles ever since. Couldn't get above the 50-day on Friday, surging above the 50-day today, getting all the way to what you would expect to be resistance at 460. Get above 460, then it's 470, and then we're pushing back to these all-time highs from back there in early May. Again, how would anyone, any human carbon-based trader be able to square a falling silver price, a bear market in the commodities, with copper making new all-time highs? So we'll see. I mean, again, we've clearly broken out here from the downtrend that started in May. Well, maybe we got a shot. So you're saying we got a shot? Yes, I am. Tuesday the 27th was option expiration day for the August gold contract. That's current front month. So you knew it was going to be a day that the banks would be paying very close attention to price to try to minimize their financial damage. Well, if you keep track of this stuff as we do at TF Metals Report, you can begin to figure out well in advance the price level that the banks would like to pin price to at the COMEX close on option expiration day when all the options get priced. As early as maybe the 21st or 22nd, we could tell that $1,800 was going to be the key level where the banks wanted to pin price. You could see it playing out on the chart, and then you also saw it play out on Tuesday, where price magically closed just below $1,800. Today, of course, brought the option expiration, as I mentioned, of the COMEX gold options. Not a big deal at all in silver, hardly any open interest in silver. So silver smashed today, mainly just a plowing of the field ahead of tomorrow, frankly. We'll get to that in a second. But in gold, again, we've been talking about this since last Thursday. Excuse me, that's 5 days ago? 4 trading days ago? This is crazy. To be able, what's the point? I'm not trying to pat myself on the back here, okay? I've been doing this for 12 years. I don't need any attaboys or anything like that. We don't need to reprove or relitigate whether at least not here at this site, whether the manipulation continues. But I will just take a second here. I mean, you know that we've been talking about this since Thursday. We talked about it in last Friday's podcast. I'll just take a second here and cleave off about 20 seconds of yesterday's podcast, and we'll just insert it here. Just in case you didn't listen yesterday. And here's what we said yesterday about today's COMEX close. Does it really matter tomorrow if the dollar goes up or down, or if the bond market rallies or sells off? Probably not. I would imagine we'll probably finish up, $1,800.75 or $1,795.65. I'm sorry, $1,799.65. Something like that. Okay, so then there you have it. So after trading as high as 1805 and then down to 1793, I screenshotted right at 1:30 Eastern, the last trade that I thought I saw for COMEX digital gold on the August contract was $1,800.15. I saw it right at $1,800 a couple of seconds after that. The actual official print, as you can see, first image on this web page, or on this podcast page, $17.99.80. So there you go. So how does a goon dope Mac with a MacBook like me tell you 24 hours, actually more like 100 hours in advance where it's going to be? Because it's manipulated. Look, I mean, I don't know what more I can tell you. But the thing that you got to understand, though, this is not to scare you away and think, oh, yeah, there's no sense in being involved in this. There's a huge potential gain coming when this all finally breaks up, right? And we have to actually price metal off of physical metal again. But you've heard all that story. In the short term, though, this is the value, at least part of the value of TF Metals report. Because if you understand prices are manipulated, then you can use that to your advantage, right? If you can understand where prices are headed in the short term due to where the banks are trying to position it, you can use that to your advantage. And I can also use to your advantage, whether you're trading, buying physical, use this manipulation analysis to time your buys. As I stated earlier, TF Metals report is not just simply about reading the charts. There's a whole lot more that goes into putting the puzzle together that is the global precious metals market. One of the little clues we get every day is something put out by the CME Group, which owns the COMEX. Every afternoon, they update how much gold and silver is allegedly in the COMEX vaults around New York City. Well, on Tuesday, there was a massive addition of silver of about 150% of annual mine supply. No way that could be right. We talked about it at TF Metals Report, and by Wednesday, that was magically reversed and taken right back out. No notation from the CME, no acknowledgement that they'd screwed up. What was interesting, though, was a massive adjustment, whatever that means, that was not reversed. Anyway, all part of the opaque, deliberately opaque market structure that is precious metals trading. We'll start today with these two images on your screen of the COMEX silver stocks. Remember, this was kind of the hot news yesterday. What did this mean? The first one is the report from yesterday showing this 1.23 billion ounces, 1.23 billion ounces being added to the eligible account at Loomis. Again, that's 38,000 metric tons. That's 150% annual mine supply. A few people said, well, of course, that's probably right. No, you don't move 38,000 metric tons into the vaults of New York and New Jersey in one day. Remember, if it's going to be in a COMEX vault, that silver's those vaults have to be within 100 miles of New York City. Okay? So this isn't just keystrokes. It was clearly an error, right? Okay, yeah, I guess so, because look at today's report right below it. Magically, it just disappeared. Now, there was no notation on the CME site. There was no notation with the report. Oh, silly us. We somehow screwed up a data entry. No, it just disappeared. Okay? And we went from, again, 1.584128336 ounces of total silver on the COMEX back to 354,469,000. Just disappeared. Now, what didn't disappear? And this is interesting. Notice the adjustment yesterday in Loomis to their registered. The adjustment yesterday of 1.5 million ounces, dropping the total from 8.38 million ounces down to 685. Okay? Did that adjustment disappear? No, it didn't. No. They somehow lost through this adjustment process 1.5 million ounces of silver. What a joke this all is. And again, the CME makes this colossal mistake and doesn't say anything about it. Okie dokie. Our Thursday conversation this week was with Dave Kranzler of Investment Research Dynamics and the great newsletter Mining Stock Journal. It's always fun to visit with Dave, and that is a free link at TF Metals Report. You should go there and check it out. You'll find it to be very informative and also a little bit entertaining. On Friday, we watched the metals pull back some from what is rather important resistance as we head into the month of August. The rally coming out of the FOMC took gold all the way to about 1835, where it ran smack dab into its 50-day and 200-day moving averages. If we can get above there, price should easily retrace back up to 1860, but it's not going to be easy. So watch those levels around 1835 as we begin trading next week and the month of August begins. Thank you for listening. Again, thanks for listening and have a great weekend.